Alright everyone, Cowboy Trades here, back with another update on Bitcoin. So on the channel, it's been a little while since we've done a on-chain metrics update. That's what we're going to be doing today. Specifically, we're going to be whale watching. So if you're a veteran of the channel, you already know what to expect. Grab your popcorn, take off your TA hat, put on your on-chain metric hat, and let's dive in. We're going to talk about some news updates focused on the liquidity in these markets. We're then going to move on to things like the active addresses, looking at the realized price, looking at whale wallets, retail wallets, what are the whales doing, what are the smart money doing, and subsequently, what you should be doing. Let's dive into the video. So let's start off with our news stories, as these are going to tie into our first set of on-chain metrics for the liquidity conditions anyway. So right off the back, first story, 3.15 billion worth of Bitcoin was sent to exchanges in the past 24 hours. Let's talk about it. And yes, I had to check that myself. 3.15 billion, not million. So when we're coming over to the Bitcoin balances on exchanges, you can really see in the past week, they've been taking, an absolute monumental run to the upside. This is bearish. I think you all understand from a fundamental perspective, when people are sending their cryptocurrencies to exchanges like they did over here, price action normally continues following to the downside. And if it doesn't, it just slowly chops sideways and down, depending on how brutal it is. But as you can imagine, 3.15 billion worth of Bitcoin inflows in the past 24 hours is not good. A large amount of this, though, however, can be attributed to another story. So we're going to also talk about this, but let's look at the 24-hour change in Bitcoin balances on exchanges before we do take a gander at this. So you can see massive outflows from Coinbase Pro. You can see massive inflows to Binance, inflows to Bitfinex. You've got 15,000, 3.2 thousand inflows, 5,500 inflows, 1.5k, 3.5k, 4.5k from Huobi. Across the board, it is genuinely in the green as people are looking to deposit their Bitcoin on exchanges. But why is 15,000 alone coming into Binance? This is where our next story comes into play. And also, let me show you what happened to FTX, minus 20,150 Bitcoin in the last 24 hours. Now, this is no joke. Look at their 24-hour change and look at their 30-day change. It is literally the exact same, almost the exact same as their 24-hour change, meaning, in the past 30 days, people only withdrew 11 more Bitcoin than they did in the past 24 hours, meaning that basically 99.99% of all withdrawals have been done today. I don't know how accurate this is, but you can see the BTC balances on FTX are apparently in the minuses right now. Technically, to have a spot wallet, you can't be in the minuses in that. So whether that simply means their liabilities are outweighing their assets, which would basically say, hey, they're insolvent, is beyond me on this one. Nonetheless, having this come into the minuses, having this FUD is not a good look for FTX. I do want to say, before I do move on to the FTX article, because I know there might be people out there that are big fans of FTX. If I'm being completely honest, I do not use the FTX exchange, and I do not give a single shit about the FTT token. So when I'm telling you what I think about this, I'm doing it from a completely unbiased perspective. This is literally the first time I've opened the chart in the past 6 months, and I haven't even really heard any talks about FTT. It's just not something I'm interested in. Don't throw rocks through my window. So I'm going to give you a unbiased little bit of news commentation on this. So this all started when CZ from Binance went over on Twitter and made this thread. As part of Binance's exit from FTX equity last year, Binance received roughly 2.1 billion US dollar equivalent in both cash, Binance USD, and FTT. Due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. Now, I'm not going to do a super deep dive into this because this is focused on-chain metrics today, but basically, this rumor, or this revelations that have come to light, is basically the rumor that they have now gone insolvent, or they are teetering on the brink of insolvency. CZ then tweeted about 6 hours later, liquidating our FTT is just post-exit risk management, learning from Luna. Wow, yeah, that is not good. you know, no matter which cryptocurrency you support, you do not want CZ from Binance out here on Twitter saying that they sold your token because it basically reminds them of the mistakes that they made from Luna. So, like I said, I will give you SBF's comments, the CEO of FTX, to provide a unbiased news coverage on this event. So they basically said, hey, a competitor is trying to go after us with false rumors. FTX is fine, assets are fine. And they also said we don't invest client assets, even in treasuries, which should mean, you know, if you're giving them 1 Bitcoin, they're not investing that in something else. So they should still be able to process all of these withdrawals. Nonetheless, wrapping up this segment in terms of, you know, what's happening in the liquidity for the Bitcoin balances on exchanges, I think this is typically a bearish signal, but nonetheless, looking at this objectively, it does look like a lot of this can be attributed to inflows in Binance from FTX. But nonetheless, if you do have your funds in FTX, I always say this, I don't recommend anyone to have any funds in exchanges. I haven't said this caveat before, especially an exchange which is currently getting flooded. I would like to highly emphasize that, in my opinion, I do not believe that FTX is going to become insolvent. But would I want to keep my cryptocurrency in an exchange? No. Would I want to keep my cryptocurrency in an exchange that is currently being flooded? No, no, no. I do not want to do that. So coming over to FTX before we do move on to some actual on-chain metrics, you can see we're really teetering on the edge of death right now. I'm really not going to overcomplicate things. Lower lows, lower highs, reversion to the mean on the EMA ribbons has just been completed. Huge amounts of selling volume is currently coming in. Literally the highest selling volume that we've had since price was at 60 and got whammed all the way down to 48. So really, really not looking good. 2 back-to-back brutal weeks, and it's only Monday. This could get a lot worse. So like I said, if I'm being completely honest, I don't use the FTX exchange. I don't plan on using it, and I really don't care about the FTT token, but in my unbiased opinion, I think we're going down to much, much lower levels. This is probably going to be the last time I cover FTT because, like I said, just being completely honest with you, I don't care about this cryptocurrency. It's not really something that I'm, you know, looking to invest in, even if we go down to much lower price targets. But I do see us coming down to about $10 or $11 in the immediate short term. So be very, very safe if you do have your funds in any of these exchanges. I've been saying on my channel, you know, this entire year, get your crypto out of these exchanges. Look at what's been happening with, you know, Voyager, Luna, Celsius. I mean, all of these, you know, bankruptcies, rug pulls. It's not good. Get a hardware wallet. Stay safe. Let's move on. So one last thing to talk about in terms of liquidity. This is not going to be looking at the cryptocurrency markets. We're going to be looking at the E-mini futures for the S&P 500 from quarter to date. So basically looking at what's been happening since the 1st of September, we talked about this. We had a decent inflow of liquidity, especially coming into that first week of November. But yeah, we had large inflows basically right at the end of October, and in the past couple of days, liquidity has been draining to the downside. You can also see the bid-ask spread is starting to push back up to the upside. Typically when this happens, this means liquidity conditions are draining. You can see over here, we had a massive, massive jump in the bid-ask spread. Liquidity basically went all the way down, and you know what happened over here? Let's visualize it. So this happened on the 7th of September. The bid-ask spread topped out, and the liquidity in the S&P 500 book depth just basically vanished. So how did the market respond to this massive increase in the bid-ask spread? How did the market respond to the book depth just basically draining, meaning, you know, liquidity was vanishing from the market? And obviously these were the lows at that day, so this is what I'm trying to emphasize. You know, volume increased after then, but let's just look at what happened when volume really flatlined out on the 7th. So let's come over to the SPX, the S&P 500. You can basically see, you know, before then, once again, liquidity was draining until we hit the 7th. Now, liquidity conditions started to improve on the 7th when we had that rally, and you can really see how these liquidity conditions affect the S&P 500. I mean, this is on the daily time frame, and within literally, you know, like a week, 2 weeks, we were having a fairly healthy downtrend, you know, over 10% in less than 2 weeks. That's a big move for the S&P 500. But on the 7th, when liquidity conditions started to improve, once again, after, you know, we bottomed out down here, you could see the SPX start to rally. But when we do look at the liquidity conditions for the S&P 500 right now, or rather the E-mini futures for the S&P 500, it does look like liquidity has more room to drain out of these markets. You'll know all about that if you have been watching my recent videos. We've been talking a lot about the liquidity. Let's get rid of this. compare the chart, simply look at the book depth, and like we were talking about, you know, these huge inflows. Now we're looking at January 1st, so we're looking at the year to date, and you can see, you know, liquidity is just genuinely tapering out of these markets with lower lows and lower highs. The mid price shows this beautifully. You know, at the start of the year we were all the way up here, breakdown, lower highs, breakdowns, lower highs, breakdowns, lower highs, and now liquidity conditions are starting to once again drain. So, you know, you can see all the way down here, liquidity conditions absolutely got rug pulled. It can get a lot worse from where we are right now, which is what I'm really trying to emphasize. So in terms of, you know, your Bitcoins, you know, your S&P 500, the equity markets, all of them, in my opinion, are going to start coming down very, very soon. I'm going to quick fire through some of these last ones because they're pretty simple to understand. MVRV Z-score, we look at this to identify final capitulations in the markets when we exit the utmost depths of the MVRV Z-score. So basically when we finally break back out of this green box all the way down here on the Z-score, it means we're starting to break bullish. Now, if we zoom in, you can see we've been in this negative capitulation territory for the MVRV Z-score, which is simply the market value, realized value Z-score. This basically pulls the differences between the market value and the realized value, also known as the realized price. The realized price is basically the average price at which Bitcoins were purchased. So as you can imagine, if you are above, if the price action rather is above the realized price, then, you know, that means the average person bought it for cheaper and they're in profit. And in the same regard, you can imagine, you know, when you're coming into these bear market territories, when Bitcoin's trading beneath the realized price, that means you're, you know, the average trader is underwater. So another way of looking at this is, once again, the MVRV Z-score. This is the market value, realized value. And when we're looking at this realized cap, this is basically the exact same as the realized price, only divided by the amount of Bitcoins in circulation. So it is literally the exact same thing. So with this, you can see on the MVRV Z-score and also on the realized price, which, by the way, if you're wondering what the realized price is, meaning what is the average price that at which recently most people have purchased their Bitcoin at, meaning if we're above it, we're in profit. If we're beneath it, most people are underwater. Well, the realized price is currently, yesterday it was actually around about, oh no, I misread this. So 21,150 approximately is currently where the Bitcoin realized price is. And when we come over to the Bitcoin price, you can see 20,800 after quite recently pushing up to 21,500. So basically we retested the average price and we said, no, we don't want people to be profitable. We need to go down lower. And that's exactly what we did. And to be honest, my TA shows that we should be now moving down to much lower price targets. The top is basically confirmed. Now, I'm just going to super quickly mention whale shadows, as we did talk about this in my last video. Basically, all I did want to highlight is, obviously, when there are massive outflows from these whale wallets, it is not a good sign. And when we do look at what's been happening in the last week or so, we've been seeing some pretty big outflows, you know, 4,000 here, 5,400 there, really in the past 5 days, you know, 1,500 Bitcoin here, 1,300 there, 1,000 Bitcoin here, you know, 600 Bitcoin here, 300 Bitcoin here. Some of these whale wallets are really starting to sell quite a lot. And specifically, if we look at these two, the most important ones, the 7 years and the 9 years, we've had a very, or 7 to 9 years and 10 years plus, sorry. You see, a lot of the times when these start to spike, these correlate to the exact tops in the markets, or they correlate to an area like right here, you know, 46,000, huge amounts of whale shadows, outflows, and then price started to dip to the downside. So not looking good that some of these OG wallets that have been here for at least 7 years are starting to offload a lot of their bags. And this also is showing us, you know, when we're coming over to the active addresses, we're seeing active addresses quite active right now. No other way of saying that. Active addresses go up, it's more active. But as you can see, if you didn't know, active addresses becoming more active is bearish, as you can imagine. You know, what happens at the top of markets? People take profit, people send their cryptocurrencies to exchanges. That wallet that hasn't maybe been used for the past week, for the past month, then becomes an active wallet as a receiver. And maybe you've got a ledger, maybe you've got a Trezor, maybe you haven't activated that in a few months, and you've sent cryptocurrency out of that to an exchange. You've now created 2 active addresses. So as you can imagine, when active addresses start to spike, there's a lot of movement in the network. These normally correlate to tops or local tops in the price action. Quite recently, you can see over here, the 65,000 top, or 69,000 top actually over here. Over here, this was roughly around about 32,500 that we topped out. And right now, you can see that we're getting a decent spike in terms of the active addresses. So, you know, this is really not going to be anything in the higher time frames, because obviously in the macro time frame, of course, there's going to be more active addresses as Bitcoin adoption picks up. But we can use this. We can look at the overextensions. We can look at these massive whiplash movements. And typically when these whiplash movements immediately just jerk us up to the upside, yeah, that is normally a sign that we see tops or massive capitulations ensuing. But, you know, don't be fooled, because, you know, basically the growth of this chart is going to be looking like this over time. You know, I'm not saying that we're not going to continue growing, because of course, you know, as Bitcoin adoption increases, hopefully this chart will increase as well. Let's now look at what the retail wallets are doing. We'll then look at what whales, institutions, and smart money is doing. So right off the back, what the shrimps of the market doing? Bitcoin wallet sizes with more than 1 BTC. We've talked about this many times before, but following this will probably get you wrecked. Yes, lots of retail wallets were here at the start of the cycle when Bitcoin was extremely cheap. So, you know, looking at Bitcoin wallets with more than 1 Bitcoin when Bitcoin was extremely cheap isn't too impressive. But at this moment in time, you can see, you know, it really becomes very, very clear data to follow at this moment in time. Let's look at what happened. So in the 2017 bull run, they basically, you know, it didn't really look like anyone was taking profit until the exact top. So price goes up, they buy, price goes up, they buy, price goes up, they buy, price goes down, sell, 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 price goes down, we sell. And then they accumulated. So they started buying in this accumulation range. When did they start selling? Did they sell at higher price targets? No. They started dumping. They started selling when the market was breaking down. They were happy to accumulate at 6,500. Price went down to 3,000 and they were like, no, you know, I'm going to sell now. They were also accumulating at, you know, 14,000, 17,000, 19,000. And then, you know, it came down to 4,000, 3,000. They were like, no, I'm going to sell now. So really didn't do a good job of this. You can also see price goes up, they start accumulating. Price goes down, they sell a little bit. Price starts bouncing back up, they start drastically accumulating. Price goes down, they sell a little bit. Price starts rocketing to the upside, and they start to sell basically when Bitcoin was at 18,000. So take this price target into consideration. This is basically, no, it's right here actually. Let me zoom in. So it topped out when Bitcoin was trading at 14,150. What happened then? They basically started to stop accumulating and they started to sell, right? Which is, I mean, selling at 14k isn't a good idea, but at least they kind of missed the breakdown, right? Well, no. You know, the price is much higher than 19,000 right now. So they were basically selling at 19,000. When did they start accumulating again? Well, we dipped here and they heavily started accumulating when Bitcoin was at 31,000. Price started to go up again and they were buying at 57,000. Price started to go down and they start to sell again. Since then, price has been going down and they have been drastically accumulating, but, you know, doing the opposite of what these type of people do most of the time is going to net you more profit than not. I also do like to follow the whales, people with more than 1,000 Bitcoin. You can see they've beautifully, you know, they've held on to the horns of the bull throughout this entire macro cycle that Bitcoin's been around for. So they were accumulating when Bitcoin was cheap. Coming up into the 2013 bull run, they started to sell just before, you know, we were starting to top out. When did they start buying? Well, they started buying when the price went down. When did they start buying more? They started buying more when we bottomed. When did they start buying even more? When we were sideways chop accumulating. When did they start to sell? They started to sell into the capitulation. When did they start buying? Well, they started accumulating as price was coming to the downside. When did they really start picking up the buying pace? At the exact bottom. So I really do like to follow what the Bitcoin wallet sizes with more than 1,000 Bitcoin are doing. You can also see they've done such a good job this entire cycle. And I'm going to show you this over here when we look at the retail to institutional addresses. If you're new to the channel and you're wondering how I know this, this is why. But this cycle was basically entirely institutional driven. Once again, look at the shrimp wallets. They started selling while the price was going up in this cycle particularly. And when you come over to the large money, the whales, your Teslas, your Michael Saylors, these, huge institutions, they were aggressively accumulating Bitcoin. When did they start to sell? Well, they started to sell at 46,000. Ever since then, they've been selling. They also did start to pick up around about March, but tons of bearish news has come into the economy since then, and they have started to sell. So when we do refresh this chart and look at what's currently going on, what are the whales doing? Very plain and simple, they are selling. Like literally, we broke down into new lows on November the 4th. November the 4th, 21,150. No, November the 6th, yesterday. Literally yesterday, and probably today after these massive exchange inflows, the Bitcoin wallet sizes with more than 1,000 are starting to offload and become smaller wallets. Now, let's head over to the retail to institutional addresses. This is just another stupidly simple one. Blue line goes up, then there are more institutional investors than retail. So once again, this is another reason why I know that this market was purely institutional driven. Price started to push to the upside, blue line goes down, which means less retail in the market in comparison to institutionals. And then what happens since Bitcoin topped out? Well, as the retail to institutional addresses, bear in mind this is literally number of retail wallets divided by number of institutional wallets. So you can imagine more retail investors come into the markets, and this blue line starts to push up to the upside, meaning there are lots of retail interest right now, but not too many institutional interest. And if you remember, the best time to start, really buying Bitcoin was when, all the Michael Saylors and Teslas were adopting it back in the day. And then, the time to start selling was when all of the, Tesla FUD, bearish FUD started to push out into the markets. But nonetheless, I do like to look at these. I do like to basically, I kind of just look at what retail is doing for a laugh. I do like to, I do like to kind of do the opposite of what they're doing, but more correctly, a more correct way of saying this is I really just do what the whales are doing, and I do what the smart money and institutional addresses are doing. And at this moment in time, they're not interested in accumulating, so neither am I. Let's wrap up the video of the price drawdown from the all-time high. So yeah, as you can see where my cursor is, 85% drop in 2014, and if we come over to the 2017 bear market, we had an 84% price drop. So these two capitulations have both been very similar. I'm not accounting for this capitulation because this was not a bear market. This was a black swan event with obviously the pandemic scare. Now, at this moment in time, you can see the price drawdown from the all-time high is residing at around about 73%. So even if, we're going to have a slightly better than anticipated price drawdown from the all-time high, we've previously dropped, 85% in the first proper bear market when Bitcoin really started solidifying itself as its own asset class. After then, we had an 84% drawdown from the all-time high. And even if, we're going to drop, let's say we're going to drop, 75%, this would still entail that Bitcoin's probably going to come down to 17K. If, like myself, you believe that Bitcoin's probably due for about an 80% correction, which is still conservative, it's a higher, we're pushing up higher in terms of the price drawdown from the all-time high. And you also have to remember, since Bitcoin has had a higher market cap, in terms of volatility, the price drawdowns are just as volatile as they have been cycle over cycle. So in my opinion, I really do think we're getting prepped for this 14,000 level down here. If we do come down to exactly 14,000, this would be a 79.69% drop from the previous all-time high. So that's really what I wanted to update you with today. Like I said, we don't look at these on-chain metrics too often. They're not really time sensitive. They don't lead the market. I do also highly recommend that you don't just trade on-chain metrics. I always say this, go out, get ranges of perspectives, look at normal TA, look at fundamentals, look at on-chain metrics, make sure you're looking at what's going on in the stock market. And of course, if you're looking at my channel, hopefully you're getting a range of all of these opinions. So with that said, cowboys, that is all I've got for you today. If you do enjoy the content, you know what to do. Like, comment, share, subscribe, tell your friends about the videos. All I've got for you today. Cowboy out. Peace.